now represents Samara Capital. Sumit, let's first start with your market view. Nobody expected the news on the medical front to deteriorate so much. Given that the markets were positioning for a strong economic recovery and a strong earning expansion, do you think the news on the medical front and the impact of that on the economy is something markets were not prepared for?
I think markets are prepared for this in the sense we have seen globally second, third, fourth wave, but we are also seeing vaccination drive increasing at a very accelerated pace, as well as herd immunity play out. And I think there are medical solutions around getting on the other side of this problem. So I think there will be hiccups along the way, but I think we know collectively how to get on the other side of this crisis. So I think it's just a matter of getting over these hiccups in the next few months.
Right. I'm generally looking at the way how the spin of the market is. And the spin of the market is that currently defensives are taking a backseat and cyclicals and industrials are outperforming. Is that the way forward also? Do you think it makes sense to look at industrial, cyclicals and economy related sectors?
I think what we have learned as a firm over a period of time, I think high quality businesses, management teams, discipline, outsmarts everything else. So I think being tactical and having a 3-6 month view is something as a firm we don't focus on. And I think as long as you focus on the other aspects of business and take a 3-5 year view, then I think one doesn't need to bother for the next 3 to 6 months in that sense.
Okay, I'm just going to revisit some of the movers in the market. It's been a very, very quiet start for us. While the Adani names continue to hold out, there's a PI Industries, GAIL, Apollo Hospitals and Concord. These are some of the names which continue to hold out. But Sumeet, given your sector focus, and especially I want to pick up on the point when it comes to healthcare and pharmaceuticals, where do you think is innovation headed when it comes to this space? We've been seeing many examples where some of the healthcare companies are getting into diagnostics, increasing their digital presence as well. Is there a trend that you spot here which is going to lead the healthcare and pharma space beyond the pandemic gains, which one has already seen play out?
I think in the healthcare pharma space, what we have seen over the last few years, and we invested in many companies like Thyrocare in diagnostics, which went public, Lotus Surgical, the sutures company, Sejanan Medical Technologies, which is a market-leading cardiovascular stents business, Asian Institute of Gastroenterology, which is a large and among the best gastro hospitals in the world. I think we see in healthcare what we call the AAA effect. I think awareness, access and affordability, all three are at play. And I think given that these three levers, we don't see them slowing down over the next couple of decades, I think all aspects of healthcare, we see strong growth momentum. I think in addition to that, I think India has come of age in many aspects of healthcare and pharmaceutical, where innovation is also playing a very big role in various parts of value chain in the pharmaceutical industry, as well as healthcare. And I think Indian innovation is able to deliver at times better products at cheaper prices, which then creates a very strong growth momentum in terms of the export opportunity as well. And we have seen, the trend in pharma and I think in healthcare now from an export opportunity perspective. And I think we see this trend both from domestic demand and export opportunity continue to gather momentum.
Sure. I also want to understand what's been your observation, given that you also have investments into the retail category, be it a Sapphire Foods or a more retail as well. What are the consumption trends that you think are evolving now post-pandemic and now again with, fresh lockdowns happening across states?
on the retail opportunities between, let's say, 1960 to 2000, I think offline retail, organized retail globally played a very big role. We saw 2000 onwards the emergence of e-commerce in various aspects again around the globe. I think we believe next 20 years belong to businesses which will get the omni-channel right in categories that deserve an omni-channel experience. So whether I think it is a restaurant business where increasingly we are seeing dine-in, takeaway, delivery all contribute to the business. So brands which can have a seamless experience for a consumer in a true omni-channel manner. And similarly, I think our experience in more retail has been similar, that a true omni-channel experience for food and grocery is also playing an increasingly bigger role. So our investment focus in this space will be brands and businesses which are gearing up to give consumer a truly omni-channel experience. And I think that's our strong view. And even for pure offline or pure online businesses, which pivot to an omni-channel model, if that category demands so, I think will come out very strong winners.
Sure. Given the kind of action we're seeing on the primary market, Sumeet, now more than ever, and looking at the cross-section of investments that you have as well, what's the kind of interest that you foresee in some of these new age companies going forward in terms of size, valuations? I mean, how much bigger do you feel that we can really see the pie growing, and what's the kind of opportunity you see there?
In the investing business last 20 years, I think initially the first 10 years, I would say 2002 to 12, we saw a very strong emergence of the private equity asset class, graduating from what I would call minority growth capital to large buyouts. I think the venture capital asset class, which kind of slowed down after the late 90s, early 2000 period and re-emerged strongly post 2007. I think that asset class in all aspects is falling in place in Indian context, whether it is quantity and quality of entrepreneurship, the market opportunity, global capital and local capital available for scale up, management professionals who are willing to be part of the startup ecosystem at CXO, CXO minus one, CXO minus two. So I think the whole ecosystem is falling in place very nicely. And I would say the opportunities has just begun. So over the next 20 years again, as we see globally, technology and other aspects are becoming a big productivity tool driver and disruptor. So I think organizations, either existing or new ones that are getting created, who capitalize on that trend will benefit very strongly, both from a consumer, shareholder, and all stakeholders perspective. So I think this is just early days for the ecosystem. And like for any ecosystem, I think they will go through their share of failures, successes, learnings, but they will come out stronger after every phase.
Fair enough. I was going to ask you about tech, but the way everyone looks at it these days, Sumeet, is that every kind of company in every segment needs tech to survive and really kind of get ahead. So that goes without saying. But would you also look at the traditional line of AI and that line of tech as somewhere in the bucket of investments? Because I was just looking at some of the key names on the list, and it's more kind of retail consumption driven at this point of time, versus and functionality driven versus perhaps something as deep as AI. Is that a conscious strategy?
So as a firm, as of now, we have a private equity and a public equity business. I think we don't do early stage venture capital, which is where I think opportunities like that fit very well. So as and when we decide to start that investments in that asset class, that will definitely be a focus area. But currently it's not a focus area for our firm, more because of we don't operate in that asset class rather than a particular view.
I'm very intrigued to understand that you are bullish on the food delivery business. But given that COVID compulsions will knock off some of these companies, and the second wave is going to be even more dangerous for some of the so-called restaurants and food delivery companies, do you think there is a massive consolidation which is due in this sector?
I think what we have seen last 1 year, the shift from unorganized to organized has accelerated. And I think the brands which were positioned quite well for an omni-channel experience, even prior to COVID onset, I think kind of survived and to some extent started thriving. And they were already above 100% of profitability levels in the last few months pre-COVID. So I think, yes, there is a hiccup for next few months, but there will be, what we have seen is that takeaway delivery demand has only increased materially during the COVID period. And as dining comes back in next few months, brands which are very well positioned for a true omni experience will fire on all the three channels, which is dine-in, takeaway, and delivery.
Okay, another interesting investment you have is SMS Facilities Management. I would imagine this is a facility management company or company which essentially manages offices and commercial outlets. Given that work at home now is something which is getting adopted, and large sectors like IT, media, the sector which I represent, financial services, the sector which you represent, work at home is now the new normal. So what is the future for some of these businesses now, especially the companies which are in the business of managing offices, commercial complexes, and various big facilities?
So work from home for few days a week, I think, is the new normal. But offices will have to be maintained all the 7 days of the week. So I think people will prefer working from home twice or at best thrice. I think everyone would, at the end of the day, like to go to office, but I think offices would need to be maintained. Yes, capacity. I think the view on commercial real estate, which actually real estate funds will have a better view. And when I speak to my friends in that part of the ecosystem, they are not seeing any slowdown. So I think the logic is same, that work from home will be there, but not 7 days a week. I think, and offices will have to be then maintained for the entire team and staff. So we don't see material slowdown. Maybe incremental growth might reduce a little bit, but we don't see material slowdown in the new addition of commercial real estate.
Okay, Sumeet, great to have you on the show. Thank you so much for taking the time out and joining in today. That's the word coming in from Sumeet Narang, founder and MD. Thanks. From Samara Capital. Let's move on and let's also hear it out from Soma Mandal, Chairman at Steel Authority of India.